Heavy is the head that has to manage all of this.
Hey everyone, welcome back to my channel.
We're now incentivized to buy what we already buy.
Fumbling through college had me building.
I also got some done on the other side.
And that was right around, I would say, May maybe, right before renewing the lease for this property.
Welcome to the channel, Martha.
Thank you for having me here.
Oh, I was going to say, I am getting up there and names, I'll tell you what.
Bills paid by other people, life was never this good. I had to step back.
Welcome back to the channel. So today I really wanted to just talk about my goals with you and let you also in on what I plan to do. A lot of the times people don't talk about these things because they don't want you to know what their next move is, right? They don't want you to have that same insight or that leg up. And I think that it's actually a detriment to those who are watching my channel, looking to grow, looking to invest, and they don't even know what my position is in everything that I do and how I plan to get to where I'm going. So I've already achieved financial freedom. If you've been watching my channel for a long time, you should know that, hey, this kid is financially savvy. He has really unlocked financial freedom. If I want to live in this home, that's already, set in stone. The mortgage is still there, but I have the passive income to facilitate paying for this home. If I wanted to live overseas, Philippines, Nigeria, which is Africa, by the way, Jamaica, Egypt, Dubai. I was in Dubai for like 2 months. Listen, I could absolutely do that. So yes, I can live as if I was retired, but there is a goal that I have in mind that is just self-determination, it's ambition, it's everything in between that makes me say, you know what, yes, I could go off to some foreign country and live my life and I already have my vacation shirt on and I'm ready to go, but there's something about being right here in the United States and saying, listen, I can get a sky rise in New York, and which I can't do right now, by the way. But the feeling of being able to say I can get a sky rise in New York, and that will be my vacation home, and it's paid off, and I don't have to worry about bills because I'm getting $20,000 in passive income every single month, right? That is kind of the goal that I aspire for. Not necessarily to live in New York per se, but to to be able to honestly live wherever I want to live. And for those who don't know, I've lived in New York for 19 plus years of my life. I still go back every now and then because I do have family that still lives there. But my goal is to actively make more money year over year. How I do that is actually very simple. And to be honest, it can be very boring. Just give me 1 second. I'm going to improve the lighting just a little bit. All right. And so when we're talking about what I do for financial freedom, I kind of went over it in the last video, but what I like to do is at the beginning of the year or right before the beginning of the year starts, I evaluate my entire stock market portfolio. When I evaluate my stock market portfolio, I look for the winners, I look for the losers. If you go back just 2 weeks, I showed you one of my stock market portfolios, and this is the one that I keep the majority of my stocks in. I have several brokerages that I use. A lot of them are retirement accounts, but this one is an active account that I constantly invest into, and so this is the one that I decided to show you. Now, in that account, I go over the 28 stocks that I currently am invested in, which ones I'm looking to dump, which ones I'm looking to keep, and what I might potentially be looking to grow with. With that being said, I like to put at least $6,000 to $7,000 in December or January into that account. Why do I do that? Is because I've already evaluated the companies, I've evaluated the ETFs, and I feel very strongly that these are the companies that I'm going to grow with for the year, for the next 12 months. And so when I put the $7,000 or so in there, I'm also looking at all of the companies and I'm saying you're going to be at 5%, you're going to be at 4%, you're going to be at 1%. And with those companies, is going to allocate my money exactly how I want my money allocated. And so now that I've already solidified what I'm going to do in the stock market, by the time tax season rolls around and everyone starts dumping money into the stock market, I've already identified what stocks I believe are going to be successful after evaluating them for the 1 year, the 5 year, what businesses they're incorporating or buying up, what new innovations they're looking to create. Do they have bad news? Do they have bad press? Do they have good news? Do they have good press? Are they looking at raising their dividend? Are they not? Are they looking to stay stable? Are they looking to build? Or are they just remaining stagnant? After identifying all these things, I then make those percentages and proposals for myself. And I already know that it's going to plan out. I've never averaged less than 28% for an entire year. In the stock market, the average is about 11 to 13. And so, yes, I know exactly what I'm doing in the stock market to be successful. I've never failed. I have never had a down year. And granted, you know, most people, if you've invested in the last decade, you probably haven't had a down year. It doesn't take much to be a great investor when the stock market has been very robust for the last decade. But that doesn't mean that everybody's getting 28% returns like I am. And so, you know, for me to be able to do that is a blessing in itself, but it's also a testament to how hard I work in the stock market. Now, with that being said, we're going to transition into real estate. And what are my plans? What are my goals with real estate? So, originally, and even now, to be honest, my goal really hasn't changed with real estate, but it might change once I've achieved that goal. And so, ironically, when it comes to being a primary resident owner, you can own up to 5 primary residences. Now, the thing for me is that I actually wanted to own 5 properties. I didn't say how many units those properties had to be, but I wanted to own 5 properties. All right, I currently own 2 properties, and I've been actively looking, especially at the beginning of the year, to buy another property. But because of the high interest rates, I kind of cooled off in the last 2 to 3 months. And now that we're at a new place of employment, we're really making more money than we've made before in years past. And all my investments are hitting on all cylinders. We're not missing any paychecks, any rental income, anything whatsoever. And interest rates are about to come down as well. You start to look at the market again and you start to evaluate whether or not there's a move to be made within this market. And so obviously my goal is 5 properties. I have 2, which means I would need 3 more. There's one thing that is actually conflicting with me. So I'm actually going to ask your advice here as my subscribers, what I should do in this case. Personally, I can stay in this home and buy 3 more rentals, which might be duplexes, because that's what I would prefer. I think that the cost for a duplex is better than a single family home. Now, it might be more of a headache due to the extra tenants, but the cost is just so lucrative that it might make up for the headache. My single family homes get rented out fully, and I have long-term tenants, so I never really have the stress of constant turnover, missed payments, things like that, where a duplex might offer more of that because people might not want to live side by side. You know, there's a lot of factors to that. So with that being said, I'm considering just staying here, which would be the most cost effective, and then having 3 more duplexes to add to the portfolio, and then just continue to pay off the primary residence and then pay off everything else one by one until everything is paid off in full. Or I'll get 2 more duplexes, turn this into a complete rental, and then I go and buy the big one. I buy the forever home or whatever you would call it these days. Honestly, there's a possibility of both happening. There's a possibility that I do go for the big one before 5 properties, which would kind of stunt me. So I'm trying to stay away from buying another personal for myself, a real personal for myself. But I absolutely love this place. I really don't see anything wrong with it. I have great neighbors as well. But yeah, it's so lucrative in real estate because one, when the mortgage gets paid off, and I'm not personally having to do that, it's the rental income coming in, right? It's not that you get the principal pay down, which I am putting extra on the principal to pay it down, but it's really not that leads to the extra wealth. It's really the appreciation that came from just staying in the same home for a year, 2 years, 3 years. You start to see that appreciation start to take effect, and that really increases your wealth overall. And one thing I do want to address is that, we've been having these 10% increases in appreciation in housing, which is not normal, right? Historically, it's been 4%. And so if you understand that, you also understand that there won't always be a 10% appreciation in the markets. It's going to cool down. But with these interest rates about to be lowered, there are so many things that might happen. To be honest, people might lower the price of their home to get it to sell with the lower interest rate because they don't want to own the home anymore, and they're really trying to beat everybody out so that they can get out of theirs first. Or everyone might say now is a great time for me to sell and try and get the biggest bang for their buck and try to sell to the highest bidder. That is absolutely possible as well. And so I actually think that people are greedy, and I think that they're going to look to maximize their profits. I think they're going to look to sell it for the highest dollar with the lower interest rates. And I don't really believe that the market is going to go down in value whatsoever. I think housing prices will continue to go up. I think the American dream will continue to be less affordable. But I do think that it will be more affordable than it has been all of 2023 and 2024 because the interest rates going down are going to outweigh the price of the increases in the housing costs. So with that being said, I made a lot of money early on in the stock market, especially with this decade of growth that we've seen in the stock market. It was almost virtually impossible to lose money regardless of how good or bad you were at investing. And so if you know that, then you also know that if you've invested in 2020 in any real estate property that didn't go under, you should at least break even or have made money as well. And so it was almost virtually impossible to lose in the real estate market as well. But the great thing about winning is that, one, you didn't have to learn from a mistake. And then two, with this time that you now have, you get to assess what is actually going on and how you yourself can pivot and be ready for any downturns, right? Because we're not going to be in prosperous times forever. We need to be able to assess the situation and ensure that we're going to be okay when it's not so prosperous, right? So when the stock market is down, will I panic? Absolutely not. Because I know that over the years, I've gained $20,000, $18,000, $15,000 year over year. And so I know that if the stock market is down $20,000 for 1 year, what's the effect to me? Not much. And then when you buy stocks that actually make sense, that actually benefit your portfolio and that should hold their value, you're not going to be hit as rough as everybody else. And when you're diversified over 28 companies, 28 stocks and ETFs, you're not as likely to be impacted by 1 or 2 or 3 or 10 companies, right? So the way I look at it, I'm so spread out. I'm so diversified in the stock market. And so real estate is actually doing a lot of heavy lifting in my total net worth as well. So when I look at real estate, I actually don't want to be so heavily leveraged into real estate. I don't want my entire portfolio to be 80% real estate and 20% stocks. And so once I get property number 3, I'm going to actually be looking at the stock market more aggressively and seeing what I can do there to really bolster that up and gain more, assets, gain more of my net worth through the stock market as well. And of course, you want to allow what is happening within the markets. You want to allow what is happening in finance, right? If real estate is doing that much better than the stock market, I'm not going to just depend on the stock market or change direction to only focus on the stock market when I know real estate is doing really, really good right now, right? You want to get into real estate when you can because stock markets are so much easier to get into. There's so much of a lesser gateway to entry. And because it goes up and down a lot quicker than real estate, it is so much easier to find a discount or a deal in the stock market than it is in real estate. So when you start to find deals and discounts in real estate, it is very, very important and opportune that you jump in at that very specific time in order to get that deal, in order to really secure that position, because it really doesn't last when it comes to real estate. So with that being said, I hope that this clarifies what my goals and aspirations are. I think a lot has changed for me once you start to incorporate thinking more so about a family dynamic and actually having that significant other around, to where, I'm now thinking, okay, what would she want for her life to look like, right? Where would she want to live? How would she want, her life to look, right? And like I said, I have a very big house for one person. I'm not going to say a single man, but for one person, or even to start a family. And so, it's not like I need to move into some big, gigantic mansion, but over time, after buying a couple more rentals, I might consider, something even more upscale. But for now, I think that in order to keep my debt to income ratio low, we need to continue to find renters who can actually afford to have a duplex cash flow, which will allow me to continue to keep my cash flow flowing, my debt to income low, allow me to continue to purchase more assets before I purchase a liability like a primary residence that I'm living in and paying the mortgage on solely. And so, that is the goal. That is the strategy. By the time we get to number 5, I might actually convert one of my primary residences to a LLC, which will then be separate from my primary residences, from the 5 primary residences. And then when I have 5 rentals, I will then buy one real primary residence that I'll live in for years to come. And I absolutely love the fact that, the average American only stays in their home for about 5 to 7 years. Now, granted, I have not reached that mark of 5 to 7 years yet, but I absolutely plan to stay in this house much longer than that because I don't want to be average. The longer you stay in your home, the more equity you build, the more principal you build, the less interest you start to pay. And so, the longer you stay, the more money you actually make. And that is very important to me, to not be average, to not just sell and go about my business thinking that, the sky is the limit and I need the bigger and the better right now. Absolutely not. Like, I want to continue to make more and more and more. And the way to do that is by continuing to invest in the process, invest in what we already have established. And so, yes, every single year we get richer. Every single year we pay down the mortgages. Every single year we add more principal, add less interest. Every single year we add into the stock market. Every single year we evaluate those portfolios. And every single year we continue to improve. So if you like this video, make sure you leave a like, comment, and subscribe. If you have questions for me, definitely leave that in the comment section down below. As you know, we post every single day at 8 a.m. daily on YouTube and on Rumble and on Spotify podcasts for our listeners. And I can't wait to see you in the next one. Peace.